G'day, thanks for watching. Let's take a look at the S&P. So we've got an FLD forecast up here. This is the daily time frame. Bring some data in. Well, prices pushed up beyond the old all-time high. All-time high now is on the 12th of January 2026 and not very far away from the FLD projection. There's still time for price to continue to the upside, meet that projection perhaps. If you'd like early access to these cycle outlook videos soon after trading ends, instead of delayed on YouTube, you can subscribe to the early access list. The link is at the top of the description. But one of the things that we have to watch for is this 9-week low. So let's have a look at the way that this works. Figuratively speaking, we've got a 40-day cycle and we'll have another 40-day cycle and then we'll have one more. So there are actually 3 40-day cycles. So the 40-day cycles are a third of the 18-week or 20-week, depending on what naming convention you're inclined to use. So that takes care of the thirds. But we also have a half with respect to the 18-week cycle. The 9-week cycle is a half. Now, in cycle terms and in fraction terms, a half is bigger than a third. So the 9-week cycle is the boss. And what is possible is that this low might actually come quite a distance down and confuse the hell out of technical analysts who would see that preceding low, which they probably wouldn't call the 40-day because most of them know nothing about time. But that preceding low, if it's broken to the downside, suddenly causes a lot of technical analysts to say, oh, we need to be short. Well, that's one of the advantages with cycles. You get a situation like this where price comes way down. That is a fabulous buying opportunity because the bounce back up is usually swift, and swift price movement means swift profit. I'll leave you with that thought. Thanks for watching.